Hopefully, we're in a market right now where everything is going to fall basically because everybody's against stocks. We want that to occur because our favorite companies then will go lower in price. All right, guys, NVIDIA stock. The reason I'm so excited to have you watch this video, if you're new to the channel, this is a stock that we did lots of videos on and said, be very careful. The stock price doesn't make sense, and it has fallen a lot. And so we're here to see if it's at the place where we want to buy the stock. Because remember, guys, every investment's the present value of all future cash flow. And unfortunately, in the short run, stocks are a voting machine, which means the more popular ones are going to go up, less popular ones are going to go down. Hopefully, we're in a market right now where everything is going to fall basically because everybody's against stocks. We want that to occur because our favorite companies then will go lower in price. If that confuses you, all the more reason to listen to the channel. We want to get you to the point where you're rooting for stocks to fall so you can buy more stocks, right? Yeah, this is a very important part for our company. So let's check out NVIDIA stock, NVDA.
They had a high of 346.47. That was just at the end of 2021.
Wow, that was 14 months ago. Yeah. And now they're at 169, but they had a low of 108.
Yes. I was just asking you before we started the video, did this company hit $1 trillion market cap? I remember it was very close.
Well, it's at 400 billion now. So double it. No, it did not hit there, but it was close.
There. Yeah. Guys, they report earnings on the 15th of February. So we'll be doing an update video when that comes around.
Yeah. So make sure if you want to learn more about NVIDIA, subscribe to the channel, go look at our past NVIDIA videos. And then for February 15th, you said?
Yeah.
So guys, look at this. PE currently of 66, 5-year of 79. Now guys, keep in mind, this business skyrocketed because of COVID. Yeah. Let's go look at the revenue growth in the last few years because COVID, I mean, look at this jump. Look at these revenue numbers. 4, 4.5, 4.9, 6, 9, 12, drop to 10. I don't know why that is. Then 14.8, 24, 28. Big jumps.
I have to think that's not sustainable.
So the question we always ask whenever there's a big drop or a big increase, is this a long-term trend? Is this a sustainable jump in revenue? Guys, everybody during COVID needed to have computers and processors, and there was a shortage and blah, blah, blah. And when there's a shortage of things, what happens to the price?
Increase the prices.
Yes, supply decreases and demand goes up. It was literally like this. Yeah. Supply and demand were like this, and then they went like that. Wait, like that, correct. Demand went up, supply went down. It's begging for an increase in pricing. So that's why I want to question this gross profit margin for NVIDIA. Yeah. Almost 60%. So let's go look at past years that were more normal to get a general idea. So whenever you want gross profit margin, what you do is you look at gross profit and divide it by revenue. So yeah, it's about 60% here. Okay, higher than that here. All right, yeah, so it's actually pretty typical. In fact, you might make the argument that their gross profit margin actually declined in the last year. Yeah. Wow. Maybe because of commodities costs on their materials, the raw materials costs might have gone up because of the worldwide inflation.
Everywhere, right?
So actually, guys, I like that. I immediately look at that going, oh, okay, gross profit might be lower than it should be. All right, let's go check out the 8 pillars here real quick. Oof. Okay, shares outstanding doesn't bother me. Guys, this is an X. They're not increasing their shares by a ton. But this is the silent killer investing that we always want to tell people, be careful about it. Make sure you watch for how many shares they're issuing because they're diluting you as an owner.
They're actually starting to pull them back a little bit.
Are they?
Yeah, a little bit.
Okay.
Very minimal, but.
And the question is, are they buying shares back at a cheap price? Just because the stock goes down doesn't make it cheap. Remember that. Think about that. Just because something decreases in price doesn't make it cheap. If I have a house that's worth $1 million and I ask $5 million for it and nobody buys it, if I lower it to $2 million, still doesn't make it a good deal. Even though the price is 60% lower, it's still only $1 million house. So our goal here is to find out what is this house called NVIDIA worth. Look at this. The 5-year PE, 79.16. The 5-year price of free cash flow, 85.
Jeez.
But look at this ROIC, very high.
Yeah, it's very high, right.
So this means they can get a really high return on their invested capital, which means they can give more money back to shareholders through dividends and share buybacks and growing the business because they need less capital to grow the business more.
Seems like this is a really good business. It's just the voting machine jacked it up into crazy areas.
And now we want the voting machine to jack it down into crazy areas.
What a nice dividend, 0.1%, $401 million. Why bother?
Why bother is right. So analyst estimates. Oh, wow. Analyst estimates are tripling their profit over the next 4 years. Now, keep in mind, is this really something to trust? Yeah. These analysts work for brokerage houses and investment houses that get business from NVIDIA. Keep that in mind when you're looking at this. Because look at this. I mean, this is a big jump here. And look how tight these estimates are. The low and high estimates are very close to each other.
On top of each other.
Guys, I remember back in the day when Amazon was losing money and analysts were saying they're going to be making $7. I don't think they're making $7 a share even now.
I don't think so.
Granted, they had a 24-1 split, but whatever it was, it's like, okay, it's very hard in this world. Let's look at revenue growth. Now, guys, I believe I read the chip industry has a 12% compounded annual growth rate estimate for the next 10, 12 years. That's pretty high.
Mm-hmm.
And I look at this revenue growth and it's pretty high. I don't know why there's a random 23%, maybe because they get out of all the issues of supply chain and raw materials and everybody who bought their computers 2 years ago are now going to buy new ones, et cetera.
I see. That's the one thing I would argue is we had that big spike during COVID after a 10-year flat period of computers, and then all of a sudden it spiked for COVID. So are those people that randomly bought a computer to stay at home for school, for work, whatever, are they going to go back and buy a new computer?
Listen.
That's a question.
How long do people keep computers for?
I guess it depends. I mean, I keep mine 3 or 4 years, and I think I'm in the...
I think you keep computers 3 years.
I think that most people can keep their computers a lot longer.
I agree
That's
with
what
you.
I'm trying to say.
Yes, I agree with you. I think people keep the computers 5 years or so. I mean,
until they die.
I mean, look at Rahman.
I was just about to say, look at Moses. He has a pimple in the middle of his.
He literally has a zit on his computer.
This is his computer. This is the keyboard right here. There's a bubble in it like this. And he's like, it's cool.
Look at Tim. I swear to God. I told him, like, Mose, I'll buy you a computer. Not this Mo, our friend Rahman. And by the way, what did he study in college?
Computer science.
Computer science. All right. So what's this company worth? Well, let's look at some other metrics real quick. Mo, look at how low so guys, the market cap to enterprise value is basically net cash and debt. So this is basically the net debt on the company. Not a lot.
Not a lot at all, especially for a tech company.
Tech companies tend to not have a lot of debt, I don't think. I don't think they have, like, look at Microsoft, look at Apple.
Big tech companies, yeah, I guess I'm thinking smaller ones.
So what we use is we use a stock analyzer tool. And for those who are new, the stock analyzer tool is so popular on our software. This was used over 1.3 million times last year. 1.3 million times by our users. It's so important because without not looking at the balance sheet, it tells you based on your assumptions what you should pay for the stock today. Okay? It allows you, the user, to be able to determine your assumptions and determine what price to pay for the stock. So if you're interested in this and the other software, go to everythingmoney.com, less than $1 a day, and we have a money back guarantee, no questions asked. So, Mo, you're going to take the 10-year analysis. I'll take the 20-year.
I'm having a hard time with this one already.
I've known NVIDIA for 20 plus years. It's been a leader for the for this graphics business for a very, very long time. So we're going to make our low, middle, and high assumptions. Okay. Their revenue already went up a ton. This is already hard because of that reason.
Yeah, that's why I don't know if my numbers are too high, too low.
The reason this is hard, guys, is we think that their revenue might fall.
That's exactly
because of the big jump in revenue over the last few years. So that's not accounted for in our software. So we have to be a little more conservative, I think, about our assumptions. But if you're buying a company for the long run, maybe you're okay with that.
I don't know.
This is a hard one.
I'm going to stick here and we'll see if we might have to change something.
So I have my 20-year growth assumptions, 3, 5, and 7.
I'm 4, 7, and 10.
Okay, good. Profit margin. I did 20, 23, 26.
I did 19, 23, and 27.
And look at this, Mo. Look at these low profit margin and free cash flow the last 1 year.
Mm-hmm.
They were lower than the last 10 years and 5 years.
Right.
All right. What'd you do for free cash flow margin?
19, 23, 27.
I did 18, 21, 24.
Okay.
PE.
14, 16, and 18.
15, 16 and a half, and 18. Now, guys, if you're new to investing, you're probably like, wait, the PE is 70 here. Sure. But don't compare the PE to its own company. Go look at all companies overall. The average is 15 or 16. Now, there's a high return on invested capital in this business of 20%. It should justify a high PE. That's why I started low at 15 and went higher to 18 on the high side. Because I do want to give it some credit for having a high return on invested capital. They need less capital to keep, they need to invest less capital to keep the business growing. And that's a wonderful thing for a company. Right. And finally, for desired return, what'd you do?
12, 14, and 16.
I did 13, 16, and 19. Yeah, I went a little bit higher because of this whole drop.
Yeah.
I'm probably being too conservative, but we'll see. Hit the analyze button. It's on my watch list at $75.
Mine's 80.
Oh my God, look at this.
Yep.
This is terrible.
30 on the low end, 50, 6 on the high end, 40 on the middle.
Why do I have it at $75 on my watch list? I'm trying to figure that one out. So the question you have to ask yourself
I can't
is,
believe your high price.
30. Well, because I did a 19% return. If we do, that's why. So let's look at what intrinsic value is for this company. So remember, guys, when you want intrinsic value, if the market's going to get you 10%, I consider 10% to be no margin of safety. And look,
there you go.
That's probably why I have it here, because I do like the return on invested capital. Very high return on invested capital makes it very worthwhile. But the low side, it's still, guys, it's still just numbers. It's still just math. And at some point, I'm probably a buyer somewhere in the 50 to 60 range is my guess. Yeah. Does it mean you should go buy it there? Does not mean that.
I'm going to leave my watch list at 80, just so, because I'm thinking maybe this has some pretty good premium if I go out a couple months.
Oh, for options?
For some options. Maybe I can get some $50 puts when the price is 80.
So remember, guys, that's what we do to generate some income. When we have stocks we like, we sell options at prices lower than the current price, but at prices we want to buy the stock at. So we're basically paid to wait. So if you want to learn that, also join the community, because we have people in the community making thousands of dollars a month just doing that. So guys, this is NVIDIA. It's a hard one. And it's hard to see a company fall from 3 something to 150 and you go, and we still say it's still overpriced big time. So that's where we stand. Thanks very much, and subscribe to the channel, because the more you learn, the less you fear, and that's important with investing. There are 3 things that you absolutely need in order to be a successful investor: the proper mindset, the proper emotion, and the proper process. Which ones are the most important?